Ariana Thacker is the founding partner of Conscious VC, an early-stage fund that invests in businesses at the intersection of the consumer and science arenas. They've invested in over 30 companies and are focused on consumerizing scientific breakthroughs. Ariana also built a large network from scratch, including amassing a following on LinkedIn larger than any other VC fund on the platform. This podcast is sponsored by me. Please go to joshterryplays.com to see what I'm up to. And please enjoy this conversation with the fascinating Ariana Thacker. Thanks for coming on.
Of course. Thank you for having me.
I want to start mostly with your story, but just for a little bit of context, let's just start with the basic. What is venture capital and what's a VC fund?
Sure. That's a big question. It's a small asset class in finance that makes a lot of noise. So we invested in the private market startups, and there's all sorts of flavors of venture capital firms. My firm, specifically Conscience, is an early stage fund, which means we invest at the pre-seed and seed stages. So very early on in the company's life cycle at this intersection of consumer and science. So think companies like Tesla, 23andMe. These are companies that have successfully packaged and consumerized scientific breakthrough. That's a very niche focus. There's all sorts of firms out there across consumer tech, enterprise SaaS, enterprise deep tech. So it's a really varied landscape of early stage and late stage, growth stage investing into startups.
What are some of the major advantages and disadvantages of VC?
Major advantage, am I allowed to say this? It's kind of like insider trading. You get all of the information within a company. You meet with the founders, you can meet with the team, you get all of the financial information, what's in the pipeline for future products. Like it's just such an in-depth insight into what's really going on within a company. So I think that's a major benefit. Yeah, it's fantastic. And you build a personal relationship with the founders too. So several of the founders love to text or call, which is awesome. And you can anticipate risks or future events too, and exactly what they need, and really play a role in opening up your network and being a sounding board and helping them advance the business.
Disadvantages?
Disadvantages, it's high risk, right? It is, especially, where I'm playing very early in the company's life cycle. So power laws tend to come into play. You could expect the majority of the companies to go to zero, but knock on wood, at 35 investments now, none of mine have gone to zero yet. So it's high risk in that way, but that's where you get these incredible multiples, right? Like some of these companies, 100x or 1000x. You don't really see that in public markets.
Cool. So let's go back in time. What got you into this? What got you interested in this?
Yeah, my career kind of looks like a super ADD train. Very nonlinear path into venture. So studied chemical engineering at UCLA. When I was going to school, had a variety of different roles. So did HVAC at Abbott Labs, did tissue engineering research in the lab, worked for Phillips 66, which is an LA-based refinery, or at least their LA location. And when I graduated, worked for this joint venture between Exxon and Shell. So pictured a hot pink hard hat and steel-toed boots. And yeah, very, very few women out in the oil patch. And some rough personalities. If you want thick skin, work upstream oil and gas. So that was fun. And that happened in my early 20s, and then transitioned into working in startups. So I was on the founding team of an academic spinout. Was running my own consulting firm, working with many different startups. And through that experience, I had so many different epiphanies just going through that arc, right? Like one, research, like graduate level research moves a little too slowly for me. So does big companies. I love startups, but I see myself more so working with the founders than building the tech. So that propelled me into venture. And yeah, I love it. I can't think of a more well-suited job on the planet for the way my mind works and my interests. And it just feels like you're a professional student. You're learning nonstop. You're working with some of the most ambitious, incredible people on the planet. Like, I love this. I love this job.
What are some of the things that started to point you toward it? In other words, I guess what I want to get at here is how did you start to get the idea that this would be the thing for you? What aspects of the job started
Yeah.
to draw you to it?
Yeah, I just noticed that I got along best with the founders in my friend circle. So that was one indicator. Another was I've always loved learning, and there wasn't just one thing that drew me in. I'm just always learning, and it's never just one specific thing. And I've never had that one specific thing growing up. Like some of my friends had total clarity that they wanted to be an astronaut when they grew up, and then they studied aerospace engineering at Stanford and then went on to this whole path for that. I've never had that moment. And I've always been good seeing the potential in other people. And I see venture capital too as a service role. You're serving founders, you're serving your investors, and you also have a responsibility to also think through the ethical implications of your investments. And a lot of the investments I make are tied to some sort of impact related goal. Not to say we're an impact fund, we're not, but a lot of the investments are tied to that. So it was this super role of combining the service element and working with the most incredible people that naturally I feel it's just such an easy relationship for me to get along with these founders and wanting to add value, and specifically with what I'm doing, the technical background and being able to underwrite these more technical companies, and this desire to create and to give back in a high leverage way, which is what venture is. You're backing the people that go on to solve the problems, create the jobs, drive the economy. So it's just this like high impact role as well. All these things combined.
One of the thing you mentioned is the many different interests. And I'm similar in that way, where I find myself, wanting to go in several directions. Uh, and there's a lot of back and forth that I've noticed people do with, I don't know, you might be familiar with like the Cal Newport deep work concept of like learning how to focus in on one thing for a long period of time. And then some
Yeah.
people extrapolate that out to a lifetime, right? Where it's like, oh, we need to really focus on one thing or we won't get what we want. Um, I I've had to do a lot of work to figure out where I sit
Yeah.
in that area where it's like, okay, how many different things can I be interested in, and how long do I need to spend on one thing to really get something done? Uh, did you find that to be a struggle? And like, do you think about that concept? Like, how do you come to that?
That yeah. I guess my quick litmus test for that is what merits more time, and usually that's tied to strong signals related to the company. When we're going through the due diligence process, like, okay, that's an interesting data point. This is worth really spending a lot more time on and really going deep and making it both urgent and important to get this done. So it's that frequent prioritization of the opportunities that we're looking at and where we need to go deeper. If we need to leverage experts too, because there's no way you know everything going into this. And usually the founder's the domain expert in a lot of the cases. So they know so much more than you can ever know. So it's this kind of tug of war, I guess. Like where should your attention be pulled next? Especially for these more generalist focused VC firms, you're just seeing so much, right? Versus like a firm that's exclusively focused on a specific type of therapeutic, for example, like that's a lot more focused and they can go quite deep. So I would say it's driven by both your thesis in the fund, like how broad are you? So then that allows you to focus on different things, like maybe you more so weight the founder psychology a lot more than the technical aspects, or you're waiting for a certain level of traction before you can consider an investment, and then the market has spoken, right? You don't need to understand all the nuances and technology that's baked in to go forward with an investment. Or you're on the other end where you're just hyper specialized and you have to know so much and you're constantly reading white papers and reaching out to professors and grad students and learning the most cutting edge technology that's happening in the field. So I think every firm's a little different in that sense. I think we're kind of in the middle with conscience. There's no way we can know it all, but we're niche enough to where we're not so spread thin, and we have technical folks in our network that we can also ping and lean on to learn a lot quicker.
So specialization or generalization, it's kind of contextual based on, you know, what your experience is demanding at the moment. Would that be a good way to assess it?
Yeah, and it's also some companies are just more difficult to underwrite too, right? Especially if it's not related to anything I've ever seen before, or the science is really complex, or there's not really a lot of research available for me to look into. So I guess that also comes into play, like how much of a learning hurdle would it be to really understand this company too, when you're looking at hundreds of companies a month, right? So some things just you just can't focus on as well.
What were some of the bigger challenges that you went through in starting your fund?
Yeah, I mean, I didn't really come from this world growing up. First in my family to go to college, we grew up very humble. I paid for my school and still found a way to graduate in 4 years without taking on debt. So I think it was building the network and establishing the credibility to then be taken seriously by some of these bigger investors in the network, and also other venture funds to want to play with you, to take you seriously. So that took a lot of work. That took a lot of effort, countless hours. There would be moments where I would wake up, not even have time to brush my teeth or wash my face, and I would be in a robe, like my pajamas, and then I'd be pitching just back to back, and then I'd pass out and repeat. So that was like my existence for a while, and I didn't, take on a salary. I moved in with my parents for a year and a half. We live in a small 2-bedroom apartment in the suburbs of LA, which is not where I expected to be at my age, but you have to make these sacrifices to build what you want to do. And a lot of folks come into venture with a lot more privilege, the network, the connections, all of it baked in. So overcoming that was really quite challenging. Yeah, and it took a lot of like creative effort. It took growth hacking. It took everything I had really to stand out and get noticed by these investors and get an anchor investor, which was like the biggest, greatest feeling I had, being able to land that. And then it kind of snowballed from there.
What did the beginning of it look like? What did like the
Yeah.
the first couple calls or directions in networking, whatever they were, what did it look like?
Yeah, so I started off with calling it a proof of concept fund, but we did this. I had a partner when I was first getting started, who preferred to work full time in startups. We're still closely collaborating. So we structured this very small SPV where we grouped several companies together into a special purpose vehicle that's an SPV. And that was essentially our fund one. We packaged all these companies, and to get that off the ground, we were raising from small check writers, collecting like 10K, 20K checks, just hitting up whoever we knew and asking if anyone wanted to join. And there was a point where, okay, to make this more compelling, we needed to bring more investments into the vehicle. We ended up having a single vehicle that housed all of these companies together, which you don't normally see with SPVs. It's normally one company per SPV. So this was incredibly de-risked for a lot of investors, especially those that came in towards the tail end of it, because they essentially got a de-risked fund. They see all the investments out of the fund. And to get that off the ground, I had to front my life savings, to get these investments in, and then get reimbursed from these small check writers. And there was no guarantee that we were going to make that happen. So that was very anxiety inducing. And then some of them had some markups and some brand name investors, and we try to get some of the more competitive deals that we can get into to make it marketable and to sell it to our network. And through that process, slow by slow, folks were kind and drove more warm introductions, and then slowly started building a network. But it was really slow rolling in the beginning. And people had this perception like, oh, if this was so compelling, why hasn't this been closed yet? And we had to then explain, well, we don't really have a network, and that's kind of like a low leverage position to be in this ecosystem. They're like, okay, well, then if you don't have a network, how are you getting these deals? Like it sounded odd to a lot of people when we were first getting started.
So I want to ask about establishing credibility in a network.
Yeah.
But also, I want to ask, how do you establish credibility with yourself? And I mean, for different people, this plays out in different ways. I don't know which way it is for you. Like, did it come that you needed to establish credibility for yourself, where I know that I can do this, I know what I need to know, etc., or did it start with kind of the experience of doing it, and then the belief came afterwards?
I've always struggled with this. I've always felt like not worthy, like I'm not doing enough, all these imposter syndrome type beliefs. And I remember just having to turn off my brain at some point because the fear was just overwhelming and there was no guarantee that this was even going to happen or that I was able to pull this off. And then like there was a point where I was updating my resume. I'm like, okay, well, if we don't get reimbursed by check writers, I don't really have much left in my bank account. Like, what am I going to do? I have to go find a job. I was like, well, am I even going to be able to find a job during COVID? This is like right when COVID was hitting. I'm like, am I even marketable as as a potential employee for having done this weird endeavor and it basically flatlining? All these thoughts came into play, and it was just eating at me for a while, and I just had to turn off my brain and just be like, no, I'll just keep powering through. Everything is compound interest. Do my best every day, and see how far we go. Like now or then was the time to really do my best and really try to make this happen. Right. Eventually, I do want a family. Not that that would bar me from pursuing something high risk, but it's probably the best time when it's just me taking care of me to be able to build this. So I saw this as the right time, and yeah, it was just long hours, mainly induced by anxiety and fear and all these negative emotions that propelled me. And there wasn't really a safety net either. Like it's just me. If this doesn't go well, then it's on me. I can't go to my parents for a lifeline, right? So when you don't have those options, then it really drives creative effort and hustle and making it happen no matter what.
So you didn't know if you could do it at the
No,
outset,
no,
right?
I didn't. And
Yeah.
like the probability of me pulling it off was very low. Like how
Mhm.
many people do you know raise a fund,
Not
right? Even
many.
when they have the network and they have the connections and they have the capital, like it's a very difficult endeavor to do. When they have the pedigree, they went to the Stanford or Harvard or MIT, they worked at the brand name fund, right? Like all the headwinds were there getting this off the ground.
Yeah.
Yeah.
So with that context, how did you establish credibility for everybody else?
It was hard work every day. It was I needed more of a track record. Like I had a bit of a track record working at the VC firm I worked at, but it wasn't much. I led one deal from start to finish, and granted that happened in my first 9 months being there, which was a promising early signal, but that's not enough to raise a fund. So it started off with this proof of concept fund, getting the most compelling companies in and having those perform well. And there was risk in that, like, okay, if one of the companies goes to zero and we're still fundraising, where does that put us, right? Especially with my savings getting fronted. So that was also an underlying concern too, especially during COVID. Like early days, there wasn't a clear indication that there would be a continued bull market, and how great the economy has been. But then there was a lot more concern and fear, right? So I was doing that proof of concept fund, and then also the growth hacking efforts too, and building Conscience. So Conscience was really differentiated in terms of thesis. There wasn't really a firm operating at this intersection of consumer and science. Typically, you see consumer tech, right? Consumer-facing firms, or you see enterprise-focused deep tech companies, but there wasn't really someone blending the two together. So having a differentiated thesis, doing the growth hacking in the firm. So growth hacked to be the most followed VC firm on the planet on LinkedIn, more than Sequoia or Andreessen. So that stood out. And then also just having the hustle and hacking it at this proof of concept fund. And a lot of the LPs were saying, like, we've never seen someone hustle this hard, or this is an unprecedented level of execution, right? So just outworking my peers to make it happen.
So you've now accomplished a ton. I mean, of course you will do many more things, I'm sure. You don't seem in the mood to stop. Uh, how did the internal credibility start to shift? Do you feel like you believe in what you can do now more than at that point? And what started to give you the self-belief?
Yeah, I think confidence is a side effect of accomplishment and having multiple validation points as you're building. And now I just have this large list of validation points with conscience and the track record and the volume of follow-on funding and the brand name investors that followed on and the traction within the companies and the publicity, all of that. But let's say none of that happened in the fund. Hindsight, I wish I had that confidence going in, because I know myself, and I know I'm not going to quit, and I'm going to keep going, and I'm going to work really hard and make it happen no matter what. Like, I know these things about myself, but I wish I'd internalized that more and had that confidence going in. Because my peers have this confidence for the most part when they're raising, and they're at the same kind of level in terms of what has actually been done when you're first going to market. So I wish I just like I just wish I'd like had that much sooner versus later. But now it's just like, okay, I know what I can do, and I have this long list of accomplishments to back that up. But for the longest time, I'm just like, I don't deserve to be here. Like, what's my self-worth? Blah blah blah. Like all these questions that you ask yourself, and when you're feeling this way. Hopefully it's not just me, and it just kind of resonates with more people, but
It is not
yeah,
just you.
okay.
It's really interesting to me, these ideas, because I mean, I really believe that confidence has immense utility. Like it's not some just random piece of bravado that's, just like a nice to have. And there's so much like cultural narrative around humility and like, oh, don't get a big head, don't be too, don't get too cocky. And it's like, I think sometimes it's really useful. And and I mean, I like what you said about giving yourself kind of proof points, where you have actual data that gives you confidence. And there, on one side we have this kind of cultural narrative around humility, where it's like that's a really idealized concept. And then on another side, we have all this. I mean, it's commonly known that we have sort of a modern tragedy of self-esteem, right? And it's like, well, where is self-esteem going to come from? Probably confidence is a factor. And a lot of people try to, boost self-esteem through, platitudes and giving themselves the just the words of praise that try to build themselves up, and it just doesn't seem to get results. And I really think that on like any level of self-confidence, self-esteem, whatever you want to call it, I think you can give yourself data points that builds that up, so that you have like the utility of the extra serotonin running through your system, so that you can just get more done.
Yeah.
I think it's an important thing.
Yeah, having let's call it a brag book or something, like this is a list of all the competencies and accomplishments. Yeah, the compliments don't really work for me for boosting the self-esteem. It never has. Like, it needed to be internal and come from me and my own belief. And things really shifted and moved a lot faster when I stepped into this realm of 100% confidence. Like, it just does. Like, people pick up on it on a subconscious level. You're attracting this energy because you feel like you deserve this energy. My friend said your success is tied to your ability to give and receive love. Like, that's where your success is. And I found myself being able to easily give to others, but not receive. And that also came in the form of investment too. So maybe I'm doing these like self-sabotaging behaviors because I feel that I'm not worthy to receive X or Y or Z, whatever that looks like, right? So it has these negative ripple effects in your business. And sometimes I see that with founders too. There's this guilt tied to accepting investment, or they feel like they're not worthy or they didn't do enough to get there. And that's tied to this false mental model too. So it's just doing a lot of self work. What really helped recently was working with a coach who's awesome, journaling in the morning. So now I'm writing down my goals and my wins, and it can be something as small as, oh, my old friend from 3 years ago texted me out of the blue, and that made me feel good, right? Like I haven't heard from him or her in a long time. Like that's a win in my book, and that makes it into my journal. So all these things.
Yeah, no, I specifically wanted to ask you about that
Yeah.
journal of wins, because I know that's something that you're big on. You journal specifically about the things that have gone right, correct?
Yes, it's important. Yeah, and I notice it kind of works like magic. And then you more easily spot these wins in your life, and it just I feel like wins attract wins. It's this positive feedback loop, and especially if you have that gratitude and appreciation around it. And when you compound that with specific goals, right? So then you have your subconscious working for you. For example, a friend was like, oh, well, I want to make more friends. And I'm like, okay, well, what are you doing to make more friends? Are you going to events? Are you reaching out to people? And she said, no, I'm not doing that. I'm like, well, I thought you wanted to make more friends. Right. And she didn't recognize that she wasn't doing the actions for her goal. So then you start doing these actions that are more aligned with your goals. That's a really simple example, but when you have clarity on what you want, you just start acting aligned with that. For me, I've been wanting to be more fit, eat more healthy, and I've been writing that down every morning. And now my whole fridge is all organic. I'm not eating processed foods. I'm working out 4 to 5 times a week. Like that was a big behavioral shift because during COVID, as I described, I was just waking up and then immediately grinding with work. There wasn't that balance. And there'd be days where I wouldn't eat till 9 p.m. and it's not the most healthy foods because I just didn't have that balance. So now that's a priority versus some of these other activities that I could be trying to squeeze into a day for the fun.
Yeah, the like noticing the wins, accepting things, like being able to receive. I think these are things that are like really undervalued and misunderstood right now. I'm a big fan of concepts of archetypes, and that's kind of a direction I come from a lot. And like I like to think about like the archetype of the king or the queen, and I work with a lot of guys that are I mean, they're responsible, they're accomplished, they have a desire to be the good king, if you will.
Yep.
Like, they've got a family that they're caring for, and they're just looking after things, right? And they're looking after things in their business. They want to do these things, and they're kind of falling apart, and almost every single time it's because they've like taken on this idea of like, okay, I need to be humble and sacrifice and do for others. And it's a bunch of these outward behaviors, which are really good, right?
Yeah.
But I'm like, look, if you don't like take the stereotype of the king, where you're like sitting on a couch being fanned with a palm frond and having like being fed grapes or something while you're laying there, if you don't take a moment to be that way, where you're getting the benefits of what
Right.
you've done, it's not about whether you deserve it or not. It's not about whether, you're being selfish or not. It has nothing to do with that. It has to do with the fact that your brain won't pick up any data points that you are actually that thing. Because if you can, like, if you win and then you don't celebrate the win, your brain does not know that it's a win. like that's not what's happened. So to me, like, part of the archetype of like the king or the queen is someone who takes on kind of a almost like commanding responsibility to say, it's time to celebrate now. Like
Yeah.
we actually are winning now, and we need to register that, because if we don't, like it doesn't. You can never create a positive loop in the brain that is that loop of I've done something hard, I've won, now I have more energy and excitement. I've done something hard, I've won, now I have more energy and excitement. That loop doesn't happen. We do something, we succeed at it, we don't get the excitement, and then we're a little bit more drained for the next time around. And I'm seeing that all over the place.
Right. I that yeah, that resonates really deeply, and it's also a question of how sustainable is that for you too. Like you're amazing, you're doing all these things, you're giving back, but then if you're not taking care of you, then what happens over a long period of time? Does resentment build?
Yes.
Especially resentment builds, right? You're feeling burnt out, you're feeling cranky, you're not as fun to be around. People are like, what happened? Right? So that self-love is so important. And also it breeds this more creative energy too, right? Stepping into moments of not doing anything and allowing things to come to you as it should. Like I'm
Yeah.
surprised by the thoughts I have, the events that happen, the people that I'm attracting when I make an effort to not do anything and just see what happens and what comes to me.
Yeah, and I think it has something to do with the desire to optimize external systems versus like realizing that you're a part of the system. And I don't know, that might be sort of an ego related thing, but the idea there is we think that if we do everything we can to optimize the system outside of this, like the business, the family, like whatever it is, you know, we sacrifice everything to make that work, then everything will be okay. But we're one of the gears. Like we're one of the cogs in the system. So, you know, if we sacrifice everything to make that system work and now we're faulty, the machine still doesn't work.
Yes. No, that's right. That makes total sense.
Yeah, and I don't know. I like the way that you seem to approach this, because I don't see a lot of people doing it.
Yeah, I mean, I can't say I've always operated like this. This came out of necessity, or you know.
Yeah,
Yeah, it just wasn't realistic for me to pound the pavement that hard for that long and not respect me or not have boundaries with my work or boundaries with even people, right? Because you just get into this mode where you're so used to giving and it's all outward focused and it's never about you and your needs. So it took like, okay, I did this digital detox. I literally put an away message on my phone. And there's a clever way to do that on the iPhone. And I didn't let anyone get in touch with me. I'm like, I need this space. This is all about me. Like, there's nothing that's more urgent right now than me having to do self care right now. And that helped me just have a hard reset on boundaries and also this schedule. So, like the journaling, the working out, the eating healthy, it all came out of that digital detox and resetting expectations with friends and colleagues.
and one other thing is like there seems to be an image around self-care of it being like a soft thing or the easy way out, or it's my favorite is that it means that you failed. Like that's my favorite like
Yeah.
misconception. And it's like, to me, that somebody that has that viewpoint is somebody who hasn't tried it, because actual self-care is one of the hardest things I know of.
Yeah, especially like I do feel addicted to my work,
Yeah.
like that it's really hard for me to say, okay, I'm going to make a targeted effort to not do anything this weekend like that. And then like for the first however 24 hours of that weekend, I'm just like thinking, okay, should I check my email? What's going on with my email? Did someone text me? Should I call a founder back? Blah, blah, blah. And I'm just like going through these thoughts like, okay, oh, let me add this to my sauna. Like all these things pop up. I'm just like, stop. Like this is your time to rest. Take advantage of it. And also like professional athletes, they understand this concept really well. You work really hard and then you rest really hard. It's these cycles. Everything is cyclical, especially in venture. There's so many periods of ebb and flow, right? Like sometimes you're seeing a ton of deal flow and there's a lot of activity happening, and then sometimes there's dry spells, like during the summer there tends not to be a lot of deal making happening, or over the holidays. So taking advantage of those rest periods to be cool, calm, collected, zen going into the busy periods of the year.
Yeah, I feel like athletics is one of those things that is able to establish those boundaries really well because it's impossible to do it any other way. Like
Yeah.
it's so tangible. It's your actual body that breaks down if you don't engage in the correct amount of recuperation. And so it's sort of, the boundaries are clearer. But talking about boundaries is, I guess, kind of the perfect place to go to the next thing. Because let's talk about social media, because you have both accomplished a lot there and established a lot of very clear boundaries. Can you just talk about what you've
Yeah.
done and then kind of your philosophy around it?
Yeah, it's really peculiar for an investor to not be on Twitter. So I'm not on Twitter. Some of my friends have tagged me as Twitterless Ariana, or not Ariana, or not conscience. Like they come up with all these like cute little tags, which I don't think it leads to any profile. I think some of them might have created fake profiles. I'm not closely tracking that. So that's happening on Twitter. I don't have an Instagram. I deleted my Facebook. I believe it was back in 2013. So haven't used that since, and not on Snapchat. Also not on dating apps anymore for like 2 years. So it's just pretty much just LinkedIn at this point, and then WhatsApp for group chats, and Slack for all the different investor Slack channels, which there seems to be a new one almost every month. So now there's like 25 Slack channels that I'm in. And then I just figured, I'm probably rarely going to run into a founder that's not on LinkedIn. So where should I spend my time? Whereas on Twitter, I did some customer discovery. I asked my friends, I'm like, have you ever sourced a deal on Twitter? And it was a fairly large sample size of other investors that are active on Twitter. And they all said no. And I'm like, okay, so what's the ROI of producing content on Twitter? Whereas on LinkedIn, I'm constantly getting founder inbounds. Founders read my content, they engage, they love the content. It has a lot to do with actionable insights and entrepreneurship and how to interact with investors and blah, blah, blah. And also Twitter just seemed a little politically charged and confrontational, whereas LinkedIn just felt more supportive, value add, more knowledge driven versus ego driven. So it just aligned better. And now I spent enough time on LinkedIn to understand the 100 little rules to structure a post too, which helped initially with building an audience on the personal page and creating this content.
So, how did you initially pursue growth and connection on there?
Yeah. So first it was understanding what makes a viral post. So with that, I was watching YouTube videos, I was reading primers, I was following influencers. I was also understanding what people that produce great content, like things that really took off and there's high engagement, versus people that just kind of flopped, and then creating these little rules around it. And then I started A/B testing that myself. And I would create several posts, sometimes a day, and then delete it, repost, delete it. And I kept iterating it, and I kept noticing pace that it would pick up speed in terms of number of views and level of engagement. So I did that for several months. And then I started getting these big wins in terms of content, specifically around the GMAT Mega Resources folder, which got like, I don't even know how many tens of millions of views at this point. And I had folks constantly messaging me saying, oh, because of this folder, I got over 700 on my GMAT. And then I would run into people in public that would somehow know my name and know that I did that and thank me for the GMAT folder. So that really took off. So there's some like home runs with that. And then another post that did well was like, here's all the Excel shortcuts that I use. And that got, I don't even know, like 10,000 or 20,000 likes on it. So it was just like tapping into what the community wanted and understanding the audience and what was trending, and also being so outward focused and being empathetic. So visualizing who's your target audience member, even giving that person a name, like to that kind of hyper specificity. And how do you create a post that's really value add for that person on the individual level, right? So not being self-promotional with it. So inadvertently that does lead to self-promotion, right? Because you're creating so much value, it drives a lot of content, it drives a lot of engagement, then they follow you. You don't even need to talk your stuff up. You can just create high value content that people want to follow and engage with.
I had a question.
Oh no.
It's okay. We edit these.
No, it's good.
What was it? It was a good one. Okay. Well, so where you're at now is it you're the most connected VC firm on LinkedIn? Is that correct?
Most followers on my profile the last time I checked, and that was benchmarked against Sequoia and Andreessen Horowitz. I think I have a good 100,000, maybe 200,000 person lead there. But at this point, I've also disclosed what I did to make that happen. So I'm curious if other firms have taken notes and started implementing that.
And has it been worth it? What sort of benefits have come out of it?
It drove meetings initially. Like, it was such an odd thing to say and to get noticed, right? Like, oh, that's peculiar. I just want to hop on a call to figure out how she did that. And that was just my opening. I would answer that question and then go into other details around the firm, and also demonstrate that that's not just like a one-trick pony kind of thing. I've done XYZ for the firm, which is really compelling and hard to do. The friend that connected us said, oh, so you just had to do the impossible multiple times over to close your fund. No big deal. And that's kind of what it felt like, just setting these ridiculous, ambitious goals and then hitting it and then going back to the LPs and marketing it. And another GP or general partner said the other day, you have the operations and platform of a firm much larger than your size, like 10 or 100x your size. He's like, do you really need to build that out? And I said, well, I'm setting a platform and a foundation for the future. I want to be doing this for decades. And I'm glad it feels like something far more sophisticated and advanced than where the fund size is at. Right. And we're just getting started and everything's exponential. So imagine where we're going to go from here. So I think it paints a nice picture for investors, but also the value add platforms for the founders, how we're able to rapidly do diligence in this space and carve out this niche. It all just kind of feeds into each other.
So let's get a little bit more detailed with the venture capital itself. What goes into creating a VC fund? And you talked a little bit about like what the type of person that might want to do this. The person that kind of leans more towards generalist. But if somebody were to be considering VC, like what goes into this?
Yeah, I think there are a lot of people who can do this type of role. So it really just depends interest level. I guess let's take a step back. Like, what kind of person would tend to do well in this type of role? I would say someone who's naturally very curious. They're a lifelong learner. They have strong EQ as well. They're able to network with a wide variety of people. Kind of this jack of all trades role where you're able to run a company and underwrite other companies and fundraise and market, build a brand. Like, you're having to do all these things similar to a founder. I tend to see all of these traits like an entrepreneur and the founding partner of a fund. So it's really this multidimensional kind of person and set of experiences. And then I think you have to have a nuanced view of the world, like something that's different and interesting. Like, you just see the world a little differently. And you don't have to come from a traditional venture background, whatever that means. You can be an engineer, you can be a mathematician, you can be a physicist, you can be an artist, right? I think there's a lot of people that can do this job, given these skill sets that either they inherently have or they've developed. And I think you need to start building a track record, which could look like a lot of different things. You don't have to have capital to do that. You can create a paper portfolio, for example, and do that by actually reaching out to the founders, getting to know their company, adding value, maybe getting advisory shares or not, just doing pro bono work and keeping track of all these companies, and just say, hey, look, I didn't commit my monetary resources. I didn't have it, but I committed my time, and these were the results. And you can do a reference check with this founder too. talk to them about my due diligence process, talk to them about my value add, right? Like that's a great way to get started. There's also so many different syndicates like AngelList and these crowd funding platforms too, where you can participate. But I think it's more impressive if you have a thesis that's differentiated, tied to your experience and authentic interests. You reach out to the founders, you find the most compelling companies in that space, you do a detailed investment memo, you add value to the founders and do all that to get started. I don't think you need capital to get started. And then slow by slow, you start building a network in the ecosystem, and you just have to be patient with that process. And also I think posting content too is a great way to scale your expertise and be a thought leader in the space. So yeah, I think that's one of many, many, many paths to making this happen.
All of that sounds very intimidating and overwhelming. But one of the most intimidating aspects of it, to me, is I can just exemplify it with this simple story. Would be you walk into a party of a group of people that are into a particular activity, and they start talking about that particular activity, and you don't know some of the words that they're saying.
Oh,
It doesn't make any sense, right? Language, right? The financial world, the investment world is a strange place with its own dialect.
yeah, true.
How does one start to, like, if they feel like they're, made for that world in some way, how do they start to bridge the gap?
Yeah, and I think your level of ego kind of dictates how much you're going to be perceptive to this and also be willing to accept feedback and learn. So if you're low ego going into this world, I think that's really helpful, right? You can spot gaps in your knowledge and not be shy to ask for help. And there's so much content online at this point. Like I'd be very surprised if you can't find the definition to an acronym or watch an interview with another investor and kind of pick up on how they interact and the words they're using and how they frame things, right? There's so many pitch competitions. You can go to these pitch competitions and see the questions and answers. So I think just being naturally curious and resourceful, you can find out what you need. And also if you find someone working in the ecosystem, reach out and get on a 30-minute call and come prepared with an agenda. Like take that time really seriously and really maximize it and just say like, what do you think about this? I heard this. How would you recommend I approach this problem? Right. And I think the timing of that ask is also really important. Like actually take the time and effort to get as far as you can on your own too, right? Like demonstrate that you're curious and ambitious and serious about pursuing this field. There's so many people that like cold email me or approach me or ask for introductions. And I ask, what do you know about venture? What have you done? What have you read? What have you learned? Have you been to a pitch competition? Have you watched any of these interviews? Who's your favorite investor? They're not able to answer these questions. And I'm like, okay, well, are you really taking this seriously if you're not even spending the time to easily find something that you can find on the first page of Google, right? Not to be challenging, but that doesn't demonstrate a level of seriousness about pursuing this profession if you haven't even taken the time to learn content easily found and readily found online.
Yes, when I talk to a programmer that's looking for a job, my first question is always, "How's your GitHub?"
Yes.
Just
Yeah.
how's your GitHub commits?
Right.
Are there regular commits? So in other words, like basically, have you done projects?
Yeah.
And really, it's
tried?
I mean, yes, we need the social skills. Yes, we need all of the other things, but the activity of just going and making something has a payoff that's absurd. And then in terms of learning, yeah, it's mind-boggling to me how much is out there. And it's funny. I mean, I'm, of course, because of the things that I'm doing, I'm having to learn new things all the time now. And it's interesting. I'll find myself coming to something, and some part of my mind will go, "Oh, you can't do that," or "Oh, you can't learn that," right?
Yeah.
And I'm slowly learning to just simply ask the question, can you Google it?
Yeah,
Like not can you learn it at all, just can you Google the thing?
yeah.
And it's like it's absurd how often the answer is yes.
Yes, you can. Like, there's so much online. Like, I know that's not a huge revelation for a lot of people, but like,
Yeah, but
it's
it
there.
also is.
Yeah. Also, like asking the question, where did you learn that mental model? Like, where did you learn that you couldn't do that or learn that is really interesting too.
Yes.
Who told you you couldn't?
Yes, that's a big one. Like, oh God, it's there's that we have a tendency somehow to like, I guess it's just safer to say that can't be done. Like it's safer in the short term, maybe. But yeah, it's amazing how much is available once you just dive in. Um,
Yeah,
okay,
totally.
so let me ask. I've mostly asked you questions from the the perspective of an investor. If somebody if somebody was considering getting funded
Yeah.
from venture capital, you know, somebody wanted to start a business or they have a business, uh, what would you recommend they think about at the beginning of that process?
It's a great question. Um, there's just so much to. I would say there. I mean, there's just so much that goes into that. It's such a broad question. I
So
would. Yeah.
let me make it more specific. Maybe that'll be better. Um, maybe if they're considering if they should or should not.
Yeah.
What's something that might tip the balance to make somebody decide, okay, yes, venture capital would be a good route for me.
Is this a venture backable business or is this more of a mom and pop shop? Like, I think that might be the first filter there. If you're just getting started, or is this something that I need outside investors for, or is this something that I can bootstrap to profitability and continue growing, or maybe just get a small loan from friends and family to get it kickstarted? Like, what are the capital needs of the business to scale, and what milestones are tied to that capital? Like, why does it make sense? And kind of having this lens as an investor going into like, how big is your market? Have you done extensive customer discovery? How well do you understand the problem? Is this the right problem to be solving? Why is this the best solution to that problem? Is the solution incremental or is it 10x? Right? Is this even worth pursuing as an idea? Too, I think a lot of folks get infatuated with the idea of building, but they don't take a step back and go through all the necessary exercises to see if this is even a venture worth pursuing, right? They don't do the customer discovery. They don't really understand the problem. They're not creating a solution that's 10x or even identifying what the root cause is. They're creating these band-aid solutions which go on top. And I'm sure there's a market for all these things, but personally, I don't invest in band-aids, and I'm looking for something that's not incremental and solving the root cause of a problem. And typically a problem like a pain pill versus a vitamin, when I'm looking to invest in someone who really understands what they're doing. They've spoken to the customers, but a lot of folks just start building, and there's not real understanding on why they're doing that or why that solution makes sense or if this is even a venture backable business. But I'd say less so for when I'm looking at founders. It tends to come through warm introductions through other investors, right? There's a lot of filtering that happens. But some of the cold outreach I get, I'm like, I don't know if this is really a venture backable business or if this is more of a like a hobby or a mom and pop shop type endeavor. So having all these filters, but it's such a big question. Like, it's so, and there's such a broad range of investors who have very different appetites and risk return profiles and stages that they come in at. And there's also accelerators and incubators that a founder could explore to get started. Yeah, and there's so many advisory services where you can get feedback. There's pitch competitions. Like, there's so many ways to validate and get your foot in the door too for a business.
Would you say I'm just trying to translate here. Would you say venture backable would be something that a company that's venture backable is a company that has more leverage? So like you said 10x versus say linear. So it's like the type of company that you can make a not necessarily a small amount of effort. Obviously, these companies are always hard to do, but it's like a small thing can create a large result. Is that sort of the thing that venture backable the thing that you're looking for in a venture backable company?
Yes, I think that's a good litmus test for that. And I think it's also characterized on maybe what it isn't. Like a consulting shop, maybe not. A restaurant chain, maybe not. Like there's a whole host of types of businesses that aren't really venture backable. But now you're seeing robo restaurants. So there's always like exceptions to the rules too. But are you making a scalable product that can have an outsized outcome and requires significant capital to get started?
Can you talk more about solutions versus band-aids? Do you have an example of that by any chance?
Solutions versus band-aids. Yeah. I'm trying to think of an example where I can keep it anonymous. I feel like this is too specific for this founder. Yeah, so let's say you are dealing with a hormonal problem, for example, and versus dealing with the root cause of that hormonal problem, whatever that looks like. And let's say one of the symptoms is cramping. You have a heat pad for cramping versus dealing with the root cause, like what's causing the cramping, for example. I'm trying to think of a generalized enough example that doesn't call out anyone, but that's not targeting the root
Makes
cause.
sense.
That's targeting a symptom of the root cause, right?
Correct.
Yeah.
Yeah. And what about in business? So maybe to make it so that you don't have to call anybody out, can you give some examples of some businesses that have provided good solutions, maybe that could have provided band-aids?
Could have provided band-aids. This is a hard question for me to answer.
That's all right.
Yeah. I don't, can we skip this one? I'm like,
Yeah,
I'm
that's
like,
fine.
but yeah, that could have provided band-aids. I don't
Yeah, I'm just trying to find ways to explore the idea.
more.
Yeah.
I can talk through one of the companies that's addressing the root cause of something, if that.
Yeah, that'd be great.
Okay, awesome. So a company that is targeting the root cause, a company called Tiny Health in the portfolio. So they're focused on fixing infant gut dysbiosis, which means if in the first 1,000 days of a baby's life, if they have an imbalance in their microbiome, studies are indicating that can lead to chronic conditions across allergies, eczema, diabetes, etc. So this company is, through personalized testing, identifying who has this dysbiosis, which infants have this dysbiosis, and then providing targeted recommendations to fix that early on and prevent these things from happening. Whereas maybe a company might give probiotics later on, or painkillers later on to solve certain things, or topical treatments for eczema. This could, in fact, prevent eczema from happening if you're able to treat this microbiome imbalance. The science is still early there, but there's some promising indications that that's possible.
That's awesome. So, let's see here. Where should we go next? I've got so many options.
Oh.
Well, I love asking this question. So let's talk about this for a little bit. What creates value?
What creates value?
Yeah, so that's the broad version of the question. But to make it more specific, how do you approach valuation in a company? Like
Yeah.
how do you? It's a kind of a wild thing. Like it's for me, it's been always kind of wild to just look, for example, at pricing, how
Yeah.
somebody prices something, right? It's sometimes it seems so ordered, and other times it seems so utterly arbitrary. How do you start to navigate that?
I mean, the real answer, early stage investors, it's a bit of hand waving, like
Hmm.
what feels like the right valuation for where the company's at. It's a bit of the Wild West, so it's whatever you can negotiate as a founder and an investor. But you also want to be there's some more drivers with that too. So if you want to be mindful of not raising at too high of a valuation, because then the risk of a down round is quite high. I mean, you don't really see a lot of down rounds because investors don't really want to come in and at a lower valuation for your company. They'll just ignore the opportunity if they think it's too rich, right? So there's that risk of follow-on capital or risk of getting a down round. Another driver to push up the valuation is if the founder is tenured, if they've had an exit, or if they've started a company previously, if they're already getting some great traction, if the product's quite developed, if they've overcome some critical milestone in the business. Maybe that's a regulatory hurdle. Maybe that's fleshing out the product to hit X feature that's super important in the business to hit. Maybe it's attracting top talent, maybe it's attracting a certain advisor, maybe it's attracting a tier one investor. All these things drive up the valuation, but it's a bit of hand waving. Like I've seen companies 5 months in raising at 30 to $50 million valuations or uncapped notes, and then I've seen others 3 years in raising at a 4 mil valuation. Also, potential upside of the business too drives that up or down. If the most likely outcome is $100 million acquisition, then it doesn't make sense to raise at such a high valuation. But a lot of these like social apps where I'm not a social investor, but a lot of these social apps where the outcome is pretty binary due to network effects. Usually it's the outsized outcome or not anything at all. So very different risk reward profile depending on the type of business that you're investing in. And all these things play into the valuation, and also volume of investor interest. If you're getting a lot of investors interested, the market has spoken, right? And that's going to drive up the demand for the valuation. Where I'm playing, I'm typically seeing on the low end 3 to 4 million, on the high end 15 million. I tend to ignore businesses above 15 million. It's a little too rich for my firm because I'm looking to be a much earlier stage investor. But in this market, you're seeing such inflated prices, not tied to the fundamentals and not tied to a lot of the drivers that I just described. It's just getting priced that way. It's a great time to be a founder right now.
So how does one get effective at useful hand waving?
How do you level up as a founder to command a higher valuation? You have to drive that investor interest. And how do you do that? You meet people through qualified, warm introductions, typically. Like that comes at the level of you're getting that person's credibility when you're getting introduced to another investor, so they're taking it more seriously. You have progress with the product. You do something incredible on the traction end. Maybe you have a pre-order wait list where people paid in advance for the product. You get some meaningful PR, like you're mentioned in Forbes and Times and TechCrunch and blah, blah, blah. You go to these pitch competitions. YC Demo Day is really great at productizing their founders and having just extraordinary valuation markups on Demo Day, right? You're seeing a lot of these brand new companies raising at like 20, 30, 40, some 50 mil valuations. So I think there's a lot of ways to push that, and it really just what's most authentic to the founder and what's within reach, right?
So as you started to build your firm up, I mean, you must have had to deal with an immense number of no's to get started.
Yeah.
And then now that you're in the position that you're in currently, you probably have to deliver a good number of no's, and you probably still get a lot of them. And anybody going through this process is gonna get a lot of no's. They're
Yeah.
gonna get a lot of rejection by just the definition of the activity. Like, if you weren't getting a lot of no's, almost something would be wrong. Like, it's that built into the process, I think. How do you manage it? How hard was it for you at the beginning?
You just can't be sensitive to it. You can't take it personally. There's a lot of reasons why people pass, and sometimes it's just not a thesis fit, right? It sometimes is you're just too early on in the company, and they're tracking you for a later round, which is fine. They just need to see certain things de-risk before they feel comfortable. Sometimes people take a while to build a relationship before they feel comfortable investing. Like there's maybe they don't have liquidity, but they're still taking meetings for whatever reason. That happened a lot. Like you just don't know the reasons behind the no, and sometimes what's even presented in a pass note isn't completely aligned with what's reality either. So I think it goes back to being low ego and talking to a lot of people and going through your pitch and learning and iterating and improving and also asking for feedback and not being shy about that and being graceful with responses to pass notes. I just made a LinkedIn post about this. The best pass note I ever received, I'm still texting that founder on almost a weekly basis and adding value and making introductions because of how gracefully he handled that. Whereas founders that said disagree but okay, or they just don't even respond, that's not, that indicates a level of maturity too, right? That's not there. So you're also being evaluated on how you respond to a pass note. So staying classy and responding in the most graceful way possible. Several of the investors that said no to Conscience in the beginning circled back and wanted to re-engage because they were impressed by the level of traction and progress and PR and blah, blah, blah. And some of those ended up writing a check or wanting to take Fund 2 very seriously, right? So treat it as a not now and respond gracefully.
Did you find it hard to not take it personally at the beginning? If so, yeah.
Of course.
How did you transition? How did
Yeah.
how did you start to switch over? Was it just drilling yourself up to like be able to handle a certain number of rejections per week, or like what sort of a process got you able to handle it?
I mean, this works with my psychology specifically, but I created my own internal shit list of investors.
Okay.
Yeah, I would never share that publicly, but these are people that I'm like, I'm just gonna outwork and outcompete and
Yeah.
have size returns, and they can beg to come back into my fund, right? So it's just like
Yeah.
having fire, right, throughout the process. So working hard to let the people that passed know that they missed out, right? And how dare they not see the potential, right? Like it's more so this like Xena warrior princess attitude versus like, oh, poor me, I'm always getting rejected. Like,
Yeah.
use that as fuel to push harder and outperform.
So, you work like crazy. You and it pays off. We talked a little bit about the self-care element, about setting boundaries, but I'd like to go a little bit more into it. I mean, you definitely like have nailed down the social media boundaries. Um, do you have like some favorite recovery things? Do you have some favorite things to help get you
Yeah.
rejuvenated?
I wish I could find an infrared sauna spot here, but I would do that a couple times a week in LA, and that was so restorative. That was amazing. Really trying to get 8 hours of sleep. Drinking water, surprisingly. Also, just trying to cut back on coffee. I was drinking coffee throughout this interview, but I was at like 5 cups a day. Now it's back to 2 cups. I'm trying to keep it there. So all these, also just like sometimes just taking longer showers and blasting music and like doing these little things and drawing and being silly like with friends, like just being absolutely ridiculous, sending like, you know, weird thoughts on how life came to be on the universe and the origin of alien species, like just whatever, just like being weird and quirky and just true to myself. And I love clothing, like dressing up. A couple folks at my old firm was just like, I've never seen you in the same outfit twice, which isn't true. Like I definitely repeat outfits, but just expressing myself through fun pieces like fun jewelry. I have this like very spiky ring or a neon green turtleneck or whatever. Like just I don't know, all these things. Sometimes ordering ice cream sandwiches and Uber Eats, like all these things.
Yeah, I mean, being silly is not to be underestimated.
Yeah.
I mean, I think it's a big factor. I mean, like, I mean, I usually think of it in the concept of play, and I mean, I've been looking into it a little bit, not much, but I went looking for researchers that had studied play, and believe it or not, there's hardly any, which to me
Wow.
seems like a major problem.
Sure.
Because if you look at basically any mammal on Earth, most of their educational process comes through play, except for humans, tragically. Their educational process comes through, sitting in one place and looking at a piece of paper or somebody that they don't want to, listen to. Like the mammal's educational experience usually comes from chasing the butterfly like playing with a clamshell under the ocean or, like
Yeah.
mammals tend to do playful things to orient themselves in the world. And I think it's both an educational process and a rejuvenative process. I might have just made up a word there. I don't know if that's actually how you use the word rejuvenate, but it works for me. Um, because on one hand, I think it's very hard for the mind to absorb data in fight or flight.
Yeah.
So, if you've got a snake coiled around your legs, it's kind of hard to memorize a times table. Like it just doesn't work so well. So on one hand, I think play has to like relieve stress so that you can like actually be relaxed enough to retain the information. I'm really curious if play increases neuroplasticity. I haven't
It's a great
found
question.
out one way or the other, but I mean, it for sure helps people learn. But then also, the same stress relieving function, it makes our body, able to switch into what is it, parasympathetic versus sympathetic, switches into the parasympathetic nervous system,
Yeah.
so that it can actually heal. So I mean, I kind of love your response, which is I go play.
I also it's most important when I'm fundraising, right? Like I just
Mm.
noticed I'm selling better, I'm connecting better, I'm more just open to the fundraising experience when I'm actually having fun doing it and taking time out to play and be in a relaxed state of mind. Like the conversion rates are so much higher versus when I get into this like left brain analytical A then B then C autopilot like execute mode. It's like hard to be human and relatable with that. Like it's almost robotic. Whereas sales and fundraising, it's more of this like human to human connection kind of sport. So play has really been helpful, and you can hear it in the voice, you can hear it in the creativity of conversation, and having some fun on the call too. So it's not so rigid, and yeah, it just enhances everything. So I think it's like stepping into play at the right times to the right functions and activities. Like if you're in this more sales person driven role, having more play, you could probably benefit greatly from that.
Yeah, and it has parallels in all sorts of areas. It's interesting where like, for example, like dating, right? So, people that struggle with dating, um, the good coaches, what they will do, spend the majority of their time doing, is actually teaching the person how to have fun. Basically, like
I
it's
need
it
this coach.
like that's kind of like what they'll focus. It's like, yeah, you got to learn how to say what you want. Yeah, you got to learn how to, walk up to somebody that you're shy around, yeah, you got to learn these other things. But like the vast majority of it is essentially like state management, right? Where it's like learn how to have a good time. And then people will want to be around you. Then like, corporate sales, I mean they're the most gregarious group of most of the aspects of a corporation is the people that are in sales. And I think it's actually, I think there's it's easy to look at it as a side effect, but I think it actually holds utility, where it's like being the person that's going and having a good time puts you in the right context to relate to another human. I think it's a critical element.
I also notice I'm just way more perceptive to micro expressions or maybe tones of skepticism or tones of not understanding, where I could dig in and provide more clarity or pause and say, do you have a question? Or would it be helpful if I bring up X on the screen or walk you through Y? So you just pick up on those cues a lot easier, and then you can help guide the conversation to maximize that meeting. Whereas if you're in this like, if A then B then C mode, you're missing out on all that nuance and frankly opportunity to connect. I noticed the best meetings, I don't know how people are going to feel about this, but we barely talked about the fund performance. We talked about interests and like long-term goals and philosophy and how I want culture to be set. Like it wasn't these hard metrics. There's more this human element to what I'm building.
Yes. It seems to open up the door for improvisation.
Yeah, God, that's been on my list for so long to take improv classes.
Yes. Yes. I need to do that as well. I learned a lot about improv inside of music, and that world. But I think there's a whole nother set of things to be learned with those improv classes. I want to do that as well. So I mean, this opens the door to one other concept, which is perfectionism. How do you deal with perfectionism, and like how important is it to navigate that, to do what you do?
I'm God, I'm a lot less of a perfectionist than I used to be. Like I used to be that straight A student where I didn't just want straight A's. I wanted the top grade in every class. Like
Yeah.
very, very much perfectionist. I wouldn't say I've like completely fixed those traits. I just sent out literally a 20-page, actually, I think it was 21 pages for my Q3 update to the investors the day of October 1st, like the day after Q3. So I definitely have a lot of these tendencies. What's helped me a lot is it's called I think the Eisenhower Square matrix. So ranking what's urgent, important, not urgent, important, not important, urgent, or not urgent or important. So force ranking these things and not having to get everything done perfectly either. So just focusing on that first column, what's urgent and important to get done, and everything else can wait, right? And you're constantly reprioritizing these things. Because part of me just wants to keep going and get the whole list done. Like write this memo to where it's like 50 pages long. Some of them are 40 pages long, like, and it's just excess and it's not really value add to the firm. So it's putting boundaries around that and going in with setting like, okay, we're going to 80-20 this. And we're going to do that by only focusing on X, Y, and Z and not A, B, C through Z, right? But I don't know if I'm the best person to consult with this. Like there's still a lot of like perfectionist tendencies in the fund, which for some things it works really well, right? Having that attention to detail, especially when you're investing, but for other things, it's not in service of the fund and performance. So like something I'm still actively working on.
Oh yeah, me too. Absolutely. And I've derived a lot of benefit from that series of those quadrants, the urgent, important, etc. It's really good framework. I love it.
And staying focused, right? And it forces you to not spend countless hours on meaningless work because it's not urgent or important. You're only focusing on what's a high priority for whatever you're pursuing.
Yes. Okay, well, Ariana, I only have you for a little bit longer, so um,
Fun.
let's ask just one or two more questions. I think we can wrap this up with so what do you think are some of the big opportunities available to us right now in the world, investing wise? You know, markets like what areas do you think investors are overlooking? What opportunities do you think investors are overlooking?
That's a great question. I would start with, where are other investors not looking, or what are you not regularly hearing about in the news? Or what are some small rumblings that you're hearing about in the news that's not yet a broader trend? I would start looking there. And do you have a contrarian opinion about something, right? What do most people believe will be the outcome, and what do you think won't be the outcome, right? How are you thinking differently about a certain opportunity? I would start there, and that's so specific to the person and their domain expertise and where they play. But it helps to start looking in areas that you already know. So let's say you come from an oil and gas background, start looking there, and having a contrarian point of view and saying, okay, well, this small event happened. What are the repercussions of that? What are the second order effects? Where do I see this going? Right, kind of extrapolating that trend. So I don't know, very generalized advice for generalized audience.
So I think part of what you're saying is that there's opportunity in all of the industries. Um,
Yeah, I guess
and this is where it comes from. Is
yeah,
that correct?
I would say magnitude of opportunity varies too, but you start where you know, like where you're most comfortable, because then you can more easily see the patterns and more easily see what's different with those patterns, right? And having this viewpoint that not many people, like consensus, wouldn't agree with, and just keep asking why and researching and going down the rabbit hole. Like, okay, well, why is this true? What's different this time? What new bill passed or will be passing, or what new technological breakthrough, or what new partnership? Like where there's change, there's opportunity too. So also go in with the framework. Okay, let me see what's different this time. What's changed? What hasn't the market picked up on yet? Like what's this epiphany that this company or founder has that no one else has, right? Um, so looking for change, looking for those deviations and patterns, looking for those shifts in consumer behavior.
Wonderful.
Yeah.
What are you currently working on, excited about, and is there any place you'd like to send folks online?
Yeah, I'm working on a few different initiatives. I'm creating this venture scout program. Already have 50 scouts in the program working for the fund, which is exciting. And I include them in a broader community. So I have this community called Club Conscience, which is new and experimental. So let's see if it's still around in a year. But so far, it's so good. And they're presenting on things not readily found on the internet. To your point on where the good investment opportunity. So this is a way for me to learn and keep up with trends, but also educate my network too. So that's fourth Friday of every month, and finding great investments at the intersection of consumer and science. So taking several calls with founders, getting to know them, tracking them if it's too early, writing fun content online. There's always something. And in terms of where to find me, I currently only live on LinkedIn. So you can find me on LinkedIn. I included my middle name too, because I think there might be one other Ariana Thacker in the universe. So Ariana Thacker, and then founding partner at Conscience, spelled like con science, like with science.
Wonderful.
Yeah.
Well, this has been a pleasure. Thank you so much for coming on.
Thank you, Josh. So fun. Appreciate you having me.